All right, let's jump right into it. Mortgage lender fees. These are the bits and pieces that nobody really tells you about until you're knee-deep in paperwork and starting to sweat. So, when you're buying a property, whether it's your first apartment or you fancy a crack at an investment property, you're going to get hit with all these closing costs. But not all closing costs are created equal.
Right? It's something I see confuse even experienced buyers. So the key thing, lender fees are the charges your actual bank or lender sends your way. Basically, for all the paperwork, approvals, and reviewing your financial life with a microscope. But they're not the whole story because, you've also got fees from third parties. That's companies outside your lender, like appraisal firms or inspectors, and those can really add up too.
Yeah, and I'll be honest, the first time I applied for a mortgage was a comedy of errors. I thought, okay, closing costs, that's just what the bank charges for their trouble. I did not realize I'd be writing checks to like 6 different companies. There's the bank, but also the appraiser, the inspector, the title company, probably the postman at some point. It felt like everyone but my dog was getting a cut.
It's so common. And I think a lot of people see that big, scary closing cost number and don't realize how it splits up. In reality, the true lender fees are only one slice of the pie, right? The rest is third-party stuff, like you said. The appraisal, title insurance, survey sometimes, all paid to completely different people than your lender. Understanding that breakdown is crucial, whether you're a first-time buyer or on your 10th investment deal.
So, let's talk specifics. Because the words on these forms, loan estimate, closing disclosure, they're always chasing me, honestly. When you get your loan estimate from the bank, you'll see a bunch of lender fees listed under loan costs. So, let's break those down. First up is the application fee. Pretty much just to apply, they'll want something for their trouble.
Yeah, exactly. Sometimes you'll see an origination fee, which is like the bank's charge for actually giving you the loan. Then there's the processing fee. This is for handling your mountain of paperwork, basically. You might also have a credit report fee. Small, but it's for pulling your credit info. And the underwriting fee, which covers the team that checks if you're actually good for the money. All those add up, and each lender calls them different things or combines them in weird ways.
Spot on. And those forms, if you've never seen a loan estimate before, honestly, they look like tax returns crossed with an eye test. But if you look at page 2 under loan costs, you'll spot each of these fees line by line, sometimes lumped, sometimes listed out. Like, I remember staring at the origination fee number and thinking it was a typo. Are we sure the decimal's in the right place?
Funny you say that. I had a client just last month. She was ready to close on an investment duplex, and when she saw the origination fee, she nearly lost it. She actually called the lender and negotiated a lower fee. And not every lender will budge, but sometimes just asking makes a difference. So, if you're comparing 2 banks, always check where these fees show up and don't assume the smaller print means smaller fees.
And the names can be totally different between lenders too. One might say processing, another says administration. Same fee, fancy suit. So always eyeball those details carefully and don't be afraid to ask for clarification. Otherwise you'll be like past me, ready to faint at the numbers.
So here's where it gets real. All those fees, lender and the rest, get lumped together as your closing costs. And that's not a small line item. Across the US, closing costs usually shake out to somewhere between 2% and 5% of your total loan amount. That's a big range, depending on where you're buying, the type of property, even which loan program you're using.
And then there's the surprise factor. Like, I remember working with a friend last year. She was buying her second home. Lucky thing, right? Down in Florida. We compared her closing statements from 3 different banks, and the lender fees alone varied by thousands of dollars. Same property, same price. It's wild.
Exactly. That's why you can't just look at interest rates and ignore the fine print. The total cost of borrowing is more than just your rate. If the lender fee is way higher on one estimate, yeah, you might want to rethink that great rate. And some lenders tuck in little surprise fees or ambiguous charges that blend into the document. Always compare those loan estimates line by line, and don't be shy about asking for explanations or even pushing back a bit.
Totally. So if you're an investor trying to keep your margins tight or just a stressed out first-time buyer, do your homework on those closing costs. Don't just Google best mortgage rate. Actually request a few loan estimates from different lenders and make them spell out every fee. No one wants a sticker shock moment at the closing table.
Exactly. And building on what we talked about last week regarding mortgage options and market context, the transparency of these fees really impacts your investment outcome. So keep your eye on the fine print, ask questions, and don't be afraid to negotiate. Sometimes it saves real money.
All right, Lior, I think that about wraps it. So next time someone says closing costs, at least you'll know who's actually getting paid and how not to get fleeced. We'll keep digging into more of these real estate mysteries in future episodes, so stick around. And Lior, thanks for demystifying with me today.
Thanks, Ruby. As always, looking forward to the next one. Take care, everyone.